So just the other day, I received a call from a vendor who was out at a property that I own myself. I own some real estate. And he said, Mark, bad news. He was checking out the HVAC system, the air conditioning. He said, the air conditioning is shot. It's a combined unit, so we've got to replace that. I said, how much? And he said, are you sitting down? Never like to hear that. 10 grand, $10,000. But whatever, it is what it is. And I thought to myself, well, gosh, at least I can, when it's tax time, I can write that off as a property expense on this property, so I'll probably have zero income showing on my taxes because I have this $10,000 replacement of an HVAC unit. Well, not so fast, Mark, because maybe I can, but maybe I can't. See, I need to understand the difference between a repair and an improvement as it relates to taxes, and so do you. If you're a property manager, you better understand this or you could find yourself giving incorrect tax accounting advice to some of your owner clients. So let's look at the things that you can, as a real estate investor, that you can fully write off on your taxes as an expense on your property, right? Things like utilities, the property taxes, your HOA fees, if you pay those, the PM fees. Your owner clients that hire you, make sure they understand that the fees they pay to you as a property manager are fully deductible to them on their taxes. Lawn service, repairs, those are things that they can write off in full. They're legitimate expenses to be expensed on the property. Some things you cannot deduct in full, and that's the key word there, in full, are things like this. New appliances, new windows, a new roof, ooh, that's too bad, restorations, renovations, improvements. Do you see kind of a pattern there? The differences between repairs and improvements. See, a repair can be fully written off in the time it was expensed on an owner's taxes. Important to know. However, an improvement cannot. An improvement has to be capitalized, is the big fancy term, or depreciated over time. That means if something is going to be improving the property, it is not fully deductible in the same year that it happened. So my air conditioning unit that I spent $10,000 to install, I have to expense that little by little by little. You know how many years the IRS says I have to expense that? You probably want to sit down again for this. 27.5 years. Now, why 0.5? I don't know. That's the IRS. 27 and a half years equally, I get to expense that item. Now, we'll see if it lasts 27 and a half years. But if I were to expense that all in year one, that's a big no-no from the IRS. And if I get audited, I'm going to get myself in trouble. So the question comes up, do you as a PM, should you be separating these things on the profit and loss statements you give to your owner clients? Should you say, hey, this was a repair, fully deductible, the toilet broke and we just went in and replaced that little piece. It's a repair, fully deductible. Ooh, but over here, that was a full improvement. We replaced the toilet, so this you probably better capitalize. Should you break those things down on the P&L? Well, before I answer that question, let me thank the sponsor for this video, ShowDigs. ShowDigs.com is how you reach them. If you are not familiar with this company, it's time to get familiar with this company, because what they do, and this is especially important right now if you're watching this during the COVID stuff going on, they send licensed real estate agents out on your behalf to show your properties, to inspect your properties. It's a pretty cool system. If you've never heard of these, you're scratching your head right now, not trying to figure out how that works. Go to their website. Check out showdigs.com. You can use them on some properties. You can use them seasonally. You can use them when you get too busy and you don't have time to show. But they're a company that you want to learn about, potentially find out how they can help you show your properties, how they can inspect your properties, save you time, and save you money. Showdigs.com. Check them out. Tell them that Mark sent you. They will take good care of you that way. Okay, so do you separate these things out on the P&L? Our recommendation is no. You don't separate these things out. You say, well, gosh, shouldn't we be doing that on our owner clients on their behalf? I called just the other day from an owner client. He said, hey, Mark, I see that you guys did some repairs. That's the word he used. Some repairs to that toilet and some bathroom, and we did some remodeling. And you guys, you replaced the toilet and you fixed the sink and you replaced a cupboard and a drawer, but you showed that all as repairs. And I really want that broken down on what items are capitalized and what is not. I said, I totally understand that, Mr. Owner, totally understand. However, we're not going to do that for you, and here's why. I'm not a CPA. And what you decide will be a capital improvement versus what you decide will be a repair, in other words, what are you going to break down over 27 and a half years, and what are you going to expense out in year one, that's between you and your accountant. Because realistically, some things are gray areas. If you have to replace the toilet because it broke, well, is that really an improvement? Or is that just a repair? I don't know. That's for your CPA to decide. So I'm not going to make that decision for you, Mr. Owner. Now, some things are obviously capital improvements. If you replace your roof, that's a capital improvement. But that's for you and your accountant, not me as your lowly property manager, to figure out what you're going to deduct all up front and what you're going to expense out over time. So we're not going to get caught in the middle. So my recommendation to you is don't even go there. Don't get caught up into that determination, because eventually you'll capitalize, or you'll label one and they won't like it. They'll say, no, I want that label the other way. Now you're stuck in a position you don't want to be in. Don't put yourself in that situation. By the way, if you want to see, we have this information that I just presented to you that we present to our owners. So if you want to get an idea of how we explain this to our owners in a very similar format to what I've just done here, in the link to this video, I'll have a link to that video. Or you can go to our website, our property management company website, go to rentgrace.com, go to our owners, investors video learning center, and you can see a lot of videos that we give specific to our owners. If you like that stuff, utilize it for yourself, because it's information you could help out with that. Hey, but one more thing before we go. First of all, I want to say thank you to everybody that attended Pulling Back the Curtain 4. We've just completed that last week. It was a fabulous event. We had about 150 different companies registered. About 300 people attended that event, listening to some of the top PMs in the industry. Thank you for those of you that attended. If you missed that one, come back next year. Hopefully we'll have it in person next year. And the other thing I wanted to mention real quickly, because I've had a lot of people asking about that, is our monthly video coaching. So every month, if you like this, you need to sign up for our monthly video coaching, because with our video coaching, you get this on steroids. I'm giving you additional documentation. I'm giving you some in-depth training that we just don't have time to go to within this. So we just finished up our 12th month. That's rolling over. Now's the time to get in. We cover things like your management agreement, income streams, how to deal with owner clients, how to deal with maintenance, your PMA, your lease. We're covering all that stuff month by month, making incremental improvements. So if you're interested in that, jump on our website, propertymanagementsystem.org, go over to the coaching, jump on that video coaching, and you can sign up for that today. We do one-on-one coaching that's currently filled. If you want to get on that wait list, let me know. But I'm hoping that can help you incrementally improve your business. But part of that is understanding and knowing the difference in when to capitalize an expenditure and when to write it off all in year one.